But first, crude oil prices are back in bear market territory. A bear market is typically defined as a decline of 20% or more from a recent peak. And it's got investors all in a spin because it's the first bear market for crude since a deal by the world's top oil producers to cut supply. That deal was expected to prop up prices and eliminate a supply gut. But US shale producers, who are not part of that deal, keep ramping up production. There's now a worry that lower oil could impact stock markets and shake up petro-dependent economies. Joining us now from London, Cornelia Meyer, an international economist and independent energy expert. Good to have you with us once again, Cornelia. Despite a heroic effort by OPEC countries and non-OPEC countries, prices keep falling. What's behind this latest fall?
Well, I think there's two things that's behind it. You see that one was expecting the inventory situation, the oil stock situation, to go down much quicker, and it just hasn't happened. And last week, or this week, was actually the first time that last week's figures by the EIA said the stocks came down 2.5 million barrels in the US. That's one. Secondly, whereas OPEC has cut with its OPEC non-OPEC deal 1.8 million barrels a day, and compliance has been stunning. In excess of 100%. They've been over-complying. What you saw is that in the US, they have been, upping the ante, and the shale producers have come back online with oil prices being, towards $50. Now, you also saw that the two countries that were exempt from the OPEC deal are Nigeria and Libya, and together they have upped their production by about 340,000 barrels a day. OK,
in the short to medium term, what's the likely impact of this on the Gulf crisis, the ongoing Gulf crisis, and what's it likely to do to petrodollar dependent economies here in the Gulf? Is this an industry in decline?
Well, it's not an industry in decline, absolutely far not. And if OPEC hadn't done its deal, we would be much worse off. But in the short run, if you have to meet your budget, you need certain oil prices. If you're totally oil revenue dependent, so for some of the GCC countries, this is really not good news in terms of their revenue. For Russia, this is not good news because they have sanctions and they really need a higher oil price. And the reason they were willing to participate in this OPEC non-OPEC deal, they took half of the non-OPEC portion, was that 300,000 barrels a day is nothing on more than 10 million barrels a day, and the uplift you get from the higher oil price really helps. But when you don't see that uplift anymore from higher oil prices, it will be more difficult for OPEC to really drive in compliance.
Is the appointment of a new heir to the throne in Saudi Arabia having any impact on the price of oil?
No, I don't think so. And I think the new heir to the throne actually is it's in some sense good news because he's of a younger generation. It's a younger country. He is the man who, with his Vision 2030, which is very bold, who wants to revolutionize the Saudi economy. He's the one who also wants to privatize Saudi Aramco. So in many ways, actually, this is not a bad thing at all. It has no impact. What really has the impact is who produces how much, how big the compliance is of the OPEC deal. Is the OPEC deal big enough? It looks like maybe more is needed. And what's also important is that, as I said before, if you don't get that uplift from a higher oil price and you produce less, the incentive to cheat on the OPEC deal may increase. We hope it won't, but it may.
Cornelia, it's always great to talk to you. Many thanks indeed for being with us on Counting the Cost.
Thank you.